Welcome, one and all, to Blueprint here at TradersPost for October 9th, 2025. I'm one of your hosts, Tom Hartman, your friendly neighborhood coder, joined as always by Peter Hartman, repping the TradersPost marketing crew. And today we'll be giving you a prop firm 101 primer. That's right. People are very interested. Hey, we see all your content online about people making oodles of money, hundreds of thousands of dollars a year, sometimes six figures in a month, and they want a piece of that sweet, sweet juice, but they don't know how to get it. They don't know how to get there. They don't know where prop firms fit in. So today we'll be covering that in droves for you beginners. As always, a quick reminder, everything we say here, build here, show here is for educational purposes and entertainment purposes only. We're here to showcase what's possible, especially with the power of automation, not to promise profits or predict portfolios' futures. That being said, I'd love to start off, Peter, with prop firms. If I were just to ask you, Peter, just off the bat, like what a prop firm is, if I just had to ask you, being tangentially in the space, barely paying attention, who knows where you are at any given time in the prop firm space, what would you say prop firms are?
A prop firm is when you have someone running for office and they're having difficulty and they need some support to be propped up. They go to a prop firm, also known as a PR firm, and that allows them to make it through.
That's correct. That's correct, except that it's not that at all. Prop firms, imagine this. What if I were to tell you that it's possible to trade in financial markets, just like you like to trade, but instead of using your own money, you use someone else's?
I do that. I use your money.
As a general rule, if you didn't have access to that, would you say that's a good deal?
Well, looking at all the people on X and the people that that Mike has interviewed on TradersPost, seems like a great idea. In fact, every single one of them is like, if I could start again trading, I would start with prop firms. It cuts your downside and your upside is really, really good.
Whoa. It's one moment there. It depends how you like to trade. Prop firms are great, but only for a certain type of trader and for a certain type of payout. All right. So I just want to set the stage here that prop firms, yes, there are these companies that allow you to trade their money and they will split the profits with you. But as you can imagine, it's not a free lunch here. There's all kinds of nuances that come into play when you're dealing with a prop firm. So let's start off here with what a prop firm is. So if we take a look here at our whiteboard, so a prop firm, it provides you with capital, and it gives you a profit split. Whatever profit you make, it will split that profit with you to varying degrees. Some of them will give you 100% of the profit up until a certain amount. Others will take 10% from you or so. But I was very surprised to see that it's not a 50-50 type situation here. So prop firms share the profit, and what happens is that what they're looking for is your edge. Right, so your edge, the discipline that you provide, that's what they're looking to capitalize on. They are sometimes taking the same trades as you are, depending on what kind of account you are and what you're doing, and they get to take advantage of your skill, your edge within markets. And they put up the cash, and then you get to trade well, and they get the profit. Now, you do have to pay for a prop firm account. That's where the quote unquote catch will come into play. They're not just giving you this account for free, and if you make money, great. If you don't. You have to pay a certain amount in order to have access to the account. Now,
can you show a prop firm website and the pricing or something?
Absolutely. If we take a look here at BluSky, this is one of the top prop firms on the TradersPost platform. Essentially, over here, if we scroll down, we'll see the different plans that they have. And let's say we go to launch plans here. This is a basic plan at $49. Here you're paying per month for the account. So that means you have the account for the month in order to trade. And once the next month rolls over, you're paying an additional fee. Some other places, you're not paying per month. What you're doing is you're paying every time you want to try that account. So you purchase that account, you're trying to get to a profitable state, and if you fail, you have to pay again. So there's different benefits to having to paying it one time or monthly. Personally, I used to do it just pay for each account every single time. Now I like the monthly thing because I really have it set in my mind that I have this month in order to try to pass this account. And if I don't, well, automatically it'll renew, and next month I'll try again. And I have there's no incentive for me to just drag out the account. When I first started doing prop firm trading, I would pay $50 for an account and then maybe take 2.5 months in order to pass it. Well, what's the point in spending 3 months worth? Like, I could have just failed the account, bought another one in the next month, and started again. Why drag out an account so that an account that normally costs $50 now costs me $150? Doesn't make any sense.
How long does it take to pass an account?
Ooh, great question. So I think
Well, the reason I'm asking is, Mike just did an interview with a trader. Well, remains to be seen. Like and subscribe. And he said, if I understood correctly, why are you spending a ton of time trying to pass these evals? Just like full port them, and if you fail, then get to another eval. You don't want to be spending a month trying to pass an eval. What do you think?
Yeah, so that's the different thing. So let's just clarify what that is. When you are dealing with an evaluation account, you're paying a certain amount and you are not earning any money on that account. What you're doing in this case is that you're spending $50 in order to pass evaluation, in order to pass their metrics, their rules. And once you pass the evaluation, that's what they call them, evaluation accounts, then you get to a sim funded account. Now, a simulation account means you're still not trading real capital in real markets. Just like the eval account, you're trading in a simulated environment, meaning that your trades that you're executing are not happening in the real market. You're using real market data, but you're not actually affecting the stock market. What you're doing is proving to the prop firm that you're consistent enough in order to make money. Once you pass that, then you're offered a sim account that you pay, in this case, an additional $99 for. And once you're in that sim account, it's still simulated trades, but if you make money on those trades, they'll pay you out. So you can actually make money on simulated trades. So this whole thing, you're not even in the markets yet. And if you pass enough after a certain requirements for your sim account, you can then what's called being called up to live. You can come to a brokerage account where you have more flexibility, more money, more payouts available, but you're actually trading in live markets. Most people, I'm surprised, like 80% of people like to spend their time in the sim funded account realm. You might ask why, Peter. The reason for that is that often there's a cap in how much money you can pay out. So, for example, for one of the accounts that I use, I can only request $5,000 max per payout period. In that case, it's per week. That means there's no point in me trying to swing for the fences making $30,000 on a trade, right? Because I'm capped. That's the only money I could have. And if the idea is that if you're sitting there and you have funds inside your account, let's say you have $10,000 in your account, and you can only add that you can get paid out on over time. So you ask for $5,000. Well, you still have $5,000 in that account, right? And next week you're gonna ask for another payout. But if you overtrade, you might lose that extra money. Sure, you might gain, but you might lose it. And so a lot of people like the idea that because there's this cap in how much you can actually be paid out, the frequency you can be paid out, or the dollar amount, it stems some people's desire to swing for the fences. Whereas when they're in a live account, trading live capital, it's sort of the same thing as when they're trading their own money. There's less restrictions and they feel they can go full bore, and all of a sudden they can lose a bunch of money.
So, yeah, I've heard this from a few of the prop firm traders where prop firm in general, and I'm guessing the eval, teaches you discipline, which is an important trait for traders, right? It teaches you to be disciplined. You've got to color within the lines, and it limits your, emotional outbursts and gambling tendencies.
Yeah, well, let's take BluSky here as an example. So on BluSky here for your valuation account, right? So this is you're paying on this account $50 or $49, and you're passing the evaluation. So you're not looking for a payout here. You're just trying to prove that you can be consistent. Your ask to reach a profit goal of $3,000. That means in that account, you have to make $3,000.
Can you zoom
And
in?
they're only allowing you, and this is true for many different prop firms, they're only allowing you to have a $2,000 drawdown. All right. In fact, that's a trailing $2,000 drawdown end of day EOD. That means if your account goes down, even though you have a $50,000 account here that they're providing you, this is a $50K account, you can only have a drawdown of $2,000 before that evaluation has failed. Right? So there's quite a few people when they're trading their own capital. Let's say they're putting on a $20,000 position, they might be perfectly comfortable with a $15,000 drawdown. Right? Drawdown doesn't mean that you lost the money yet. It just means that your position is negative by this amount. Your account is negative by this amount. They might be perfectly fine with that. But for a prop firm, they're looking for consistency. They're not looking for you swinging for the fences. And so they'll only allow $2,000 drawdown. All right? So that's one of the eye of the needle you sort of have to thread. And then you need a 30% consistency, which means no trade in your account. Let's say you do get to $3,000. No trade can be higher than 30% of your gains. So that means you can't make one trade, make $3,000 and say everything's good. You have to, you can only make 30% of that, right? So you can only make $900 on that's the highest trade you can get can be $900. So if you had 3 trades at $900, then okay, plus a little bit extra in order to get your 3,000, fine, you pass the account. But if you have a trade that goes beyond, let's say you didn't pay attention and you took a trade that's now $1,500. Well, now that's now your 30%, right? You got to make 1,500 again and 1,500 again and then extra in order to pass the account. Does that make sense, Peter? That consistency, they're looking for you to be consistent, not only in your drawdowns, but also in your winnings.
Right.
Which is brutal.
Seems like it makes it tricky.
Yeah, but we had an interview on Trading Bot Sessions. I think it's going to be coming out soon with from Mustang Trader. What it was is that he let a winner run early in his trading days, and he was up like, I don't know, something like 18,000, let's say, right? And he was only supposed to make like $900. So then he gets an email that says, okay, now you have to make $120,000 or something like that in order to pass this account. You have to make an extra whatever the number was, some huge number. And he's like, what? So then it made more sense just to fail the account and start again than to try to sit there and make all that money. So consistency is there. So there's that threading in the needle that happens with the prop firms. Why are they doing this? Well, they don't want the degenerate gamblers to just be open up a position, put it on a huge thing, and now, you could do that 20 times in a row on one of those accounts, make $100,000, and then they have to pay you out. No, they're not looking to do that. So, and then once you pass the evaluation period, and now you're in a sim funded account. So now you're paying an additional $99 in order to be like, okay, I'm ready for this to be, let me try to make money on this. You have a starting balance here of $3,000 on the $50,000 account, and you have to reach a minimum amount of $250 before you can even request a payout. However, here you don't have the trailing drawdown problem, but if your account goes down below zero, then the account is blown. So that means, let's say you're inside a funded account and now you make $5,000, you're up $5,000. Well, if you draw down and you get down below that $5,000 level, you get down to zero, then the account is blown. You can't hold the position into a negative value. Your account will be liquidated and you're gone. So if you do that and you blow that account out, you're out now the $99 and you're out the $50 that you initially paid in order to get this, and you have to start again. So a lot of people see this as farming these accounts, that you're passing evaluation accounts and then you gain sim accounts that you can actually get payouts on, and you always have a batch of evaluations that are turning into sim accounts, and there's always a certain percentage of sim accounts you're going to lose and you have to start again. It's just the cycle process. So to answer your question that you were saying before, your comment, some people go full bore on eval accounts, go, oh, I don't care, let me start again. I'll just pass the eval account as quickly as possible and start again. But that could be detrimental, because then you have to have a totally different trading style on the evaluation than you do on your sim accounts. And you might not be able to switch back and forth. Right? And so some people don't like that. So how long does it take to pass the eval account? It could take people a couple of days. It could take people months.
Right. And the faster you pass the eval account, the better. You don't want to take a month or months in order to pass an eval, from what I understand, because you're not getting payouts from evals, you're getting payouts from sim funded. So you want to get the sim funded as fast as possible. Isn't it better to just, full port your eval account? And if that doesn't work out, fine, and then get to your funded, or I guess just buy straight to sim funded. But before we do that, and I don't want to go down that road because I don't know if that's what you're talking about here today. We're talking about 101, and the interview that's coming out in a few days on TradersPost is going to talk about that. So I don't want to step on his toes. But what you said there about the rules makes me think of when we used to play League of Legends. League of Legends is this a video game, and you're playing with teammates, right? And you could have a teammate who's like wild, who might make a big play and it pays off, but they might make 10 other plays and it just destroys the game. Like, it doesn't matter that you can make this big thing and you took this big risk and you won. We're all playing a game here that requires a consistency for us to be able to win this game. It doesn't serve us to have some YOLO moment where you're Michael Jordan for anybody who's younger than 20. LeBron James, I think he doesn't serve you to be able to hit a three-pointer half court one time. You have to be able to do it consistently, and far better for you to be getting those 2-point shots on a consistent basis than a full court throw that you're nailing once in a while.
That's right. And to continue your video game analogy, it's very much like Tetris, right? You got to not hit the top of that screen.
Right.
Right. And so being all crazy and just dropping pieces and, hey, this just worked, let me move on to the next one, completely screw you over. Because when it hits the top of that screen, it doesn't matter how well you did. It doesn't matter what level you're on. You're going back down to
how cool your move was. Yeah,
exactly. Just to touch on what you're saying there, that is the next point I wanted to say there. So prop firms allow you to have these evaluation periods that is very helpful for people to work through what their actual strategy is, either automated, semi-automated, or manual, before they move on to express to sim accounts. But you can actually, for a lot of these prop firms, BluSky included, you can go straight to a funded account. Right, so you can just go ahead and pay directly for a direct-to-funded account, and you don't have to pass this evaluation period. You can go straight there. Right, so people who have experience with prop firms and they're like, okay, I know what I need to be doing. I could just go straight there. You're paying more than you would if you did the evaluation and then pay the extra for the sim funded, but you start right away.
How much is how much is the direct?
They change depending on the requirements for them. For direct to funded here, it's $800, $749 in order to go to direct to funded. Different prop firm accounts have different direct to funded amounts.
So, like, okay, so if you do, maybe this is 102. If you are able to, you do the eval, you get to see sim funded, you get a payout. Let's say you get a payout of 5,000, and you can do that consistently or routinely. Wouldn't it be better at that point to then take some of your payout to buy a direct account versus going through the evals again, because that time that you're spending is money? So if you are a person who can get payouts and does, you should take a portion of that money in order to go direct to save you time. Does that make sense?
Yes, but it depends on what your payouts are like. So for example, let's say there's a minimum payout on these static accounts on BluSky for $250. So let's say you're going for $500 a pop for payouts. That's very different than someone who's saving up and doing $5,000 a time. Right? So it might not be worthwhile. It might be worthwhile for this person to pay $50, wrong one, to pay $49 plus the $99. So they're paying $150 and get to an account where they can get funded. Then to pay $750 to get to that funded. If they're not consistent enough, if they don't think they might blow that account,
Right,
you might
right.
blow 3 to 5 accounts in a shot. Well, then now you're out $750 per each one. So the benefit of going through the evaluation phase is that it actually costs you less money than if you went direct to funded.
I guess, like you said, it depends on your ability. Like if you are consistently getting payouts and you're able to trade, then I mean, the direct to funded accounts is there for someone. And from what I've been hearing from different traders, especially the interview today, it does make sense for some people to be like, look, I don't want to spend 30 days, 2 weeks, whatever it is, on an eval. Like I need to be able to make money every day. But it's there for
Yeah.
someone, right?
Yeah. Well, let's say your strategy, you don't trade a type of strategy that you can trade every day. Maybe you
Right.
only trade through certain regimes. Maybe there's certain periods of time. Hey, we're in a bear market. I know it's going to last about 18 months. This is my period of time where my strategy will work. Well, maybe you want to just get up to speed, direct to funded, because you're going to be able to make this money for this period of time. You're not going to be able to make it year after year. Or maybe you don't have the some people psychologically, because the evaluation accounts are not, you can't get any payouts on that. They might take more risks on those than they would on a direct to funded account. Some people are more careful on a direct to funded account. So they might like that accountability because it's more of their capital that's on the line. So yeah, there's different reasons why. All right. So who are prop firms for and not for? So if you're starting off with a small amount of capital, and this to me is like the most interesting part of it. If you're not sitting there and you don't have a $100,000 account in order to go ahead and trade, it can be challenging. It can be difficult because if you're sitting there and what you have is $200 a month in order to trade, you're not really going to get into a futures account. You're not really going to be able to get in any position of size that matters, right? And getting payouts on that is going to be pretty difficult. However, you can use that money and buy 2 evaluation accounts and then move them up to sim funded accounts, proving that to yourself, and you're just taking that $200 every month that you have disposable for trading and buying accounts and then trading larger capital so that you can actually get way bigger payouts than if you were to trade your own money. Prop firms are also good for disciplined and rule-based traders. Peter, speaking as somebody who is not always disciplined, not always rule-based, as you can see on Price Action Live Tuesdays to Fridays when I'm trading here on TradersPost, if you don't have rules, then you're just winning by luck, and it can be really, really painful because you can lose accounts all the time. And I have, I'm up to 10, 12, 15 accounts right now. So if you can follow a plan, you can log your trades, you can respect your limits, prop firm accounts actually amplify, they increase the amount you can gain because you have access to more money. But if you are a martingale guy, Peter, is someone who, when they lose a trade, they take the next trade double. So that if they win, they get back to break even. If they lose that trade, they go triple. And they keep adding. Well, good luck. You're not going to do that in a prop firm account. You're going to get blown out real quick.
It's probably the most natural strategy that has ever been developed. Like every gambler in the whole world, even including a child, has thought, hey, let me just double.
Well, because it works fantastically if 2 things are true. 1, you have infinite money. And 2, because if you just infinite money, eventually win. And 2, if you're betting against heads, if you think it can be heads 20 times in a row. If you think those 2 things are possible, you think you have infinite money and that it's not possible for a coin to flip heads 20 times in a row, go ahead with a martingale. Then martingale works fantastically. So if you plug in these assumptions, it's fine. But martingale strategies, I mean, I've coded them so many times until the point where now I tell people I'll never code you a martingale strategy anymore because they'll just lose. You're not going to be a returning customer if you're a martingale strategy player. You eventually get to all in. You eventually get to, I'm now all in. If this doesn't work, I completely fell in, blew up everything. If you're a revenge trader, prop firms, not for you. Not good. So if you get a bad trade and now you're upset because you're in the drawdown and you want to revenge trade in order to get back, great way of losing your account. And finally, for news gambling. So for people who are event driven. So your goal is to trade volatile events, CEO changes, earnings reports, FOMC meetings, stuff like that. You can get wrecked like that. because you're like, you don't have a lot of drawdown. So you might be like, okay, it's Chairman Powell's about to speak. I know the price is going to move in this direction in a volatile manner, but you're right in direction, but it wicked in the other direction. It drew you down. Your account got liquidated, and now it went back to where it needed to be. And so when you're dealing with high volatile events, it could be very difficult to run a prop firm account.
I do want to push back on this prop firms may not be for you thing that you're saying. I think you might be wrong about this in a different light.
Please tell me.
So there's doing prop firms, from what I understand, doing prop firms in order to get those payouts. But there's two other reasons to use prop firms. One is for entertainment, right? The fun of trading.
Sure.
So if you have disposable money, I'll just put 50, 150 bucks here. Don't care if I win or lose. Then you can martindale and double down and use all you want, like just for the fun of it. And then the other aspect is learning, right? It's an education. So I don't want to go out and say, if this is you, if you're a gambler, if you're this or that, you shouldn't do prop firms. It might be very beneficial, especially if you're going to be trading discretionary, manual trading in the market. If you are going to be putting your money there and perhaps losing a lot, prop firms cut your downside risk. So I say, even for those things, I would think prop firms might be good for you.
There's one very important point with that to some degree that might be true, but you can't actually go too far with that. Prop firms, like I said at the beginning, are looking for stable, consistent edge. If a prop firm thinks that you are revenge trading, you're just doubling down, you're martingaling the whole thing, they'll eventually block you from trading that prop firm account. So if your trading behavior shows that you are not diligent, not disciplined, not only can you lose your prop firm account, they might actually deny your payouts.
Yeah, but that's only if you're like doing it like a lot. You know what I mean? So if like for me,
you're right, Peter. If you don't stop at every stop sign and the cop is not there, okay, fine, you might be able to get by, but eventually you lose your license. So it's a great way. There are all kinds of systems in place within the prop firm space in order to try to mitigate risk, right? Look, it's not free money. There's a prop firm on the other side who has to pay out millions and millions of dollars. All right?
No, I get that.
There are prop firms out there who I've seen, they have requested from people, hey, you need to record a video of you trading and let's see how you actually trade before we give you a $50,000 payout. It might take you 3 months in order to get it. Like, this happens.
Crazy.
Because they'd be like, what is going on? There's a story of a husband and wife are trading prop firms inside of their home, 2 different rooms, and they got their accounts banned because they're like, oh, you're going long and short at the same time. You're like, you had one prop firm account where you went long and the other prop firm account you went short. And they're like, no, we did it. It's like, yeah, we could see it over here. So that's just because we're in the same internet address, the same IP address. Like, well, you could be,
are we supposed to know?
Be cheating, you'd be lying, exactly. Or stuff like if you're in a trade and you go into trades and you're in the trades for like 10 seconds at a time. Right. So then they're like, well, we don't like that. We need you to be more consistent. All right. Before we continue, let's get a quick word from our sponsors.
Looking for a prop firm that actually plays nice with automation? Meet BluSky, built for serious traders. And with TradersPost, it just clicks. You connect BluSky inside TradersPost, route your TradingView signals to paper or funded accounts, and let it auto-manage entries, stops, and targets. You control risk per trade, filter by session and symbol, and pause or resume with a single switch. Every fill is easy to review in one dashboard. Funded accounts can request payouts daily with launch plans starting at $49. Get funded with BluSky. Execute with TradersPost. Apply today at blusky.pro, BLUSKY.pro, and plug in your edge. Trading involves risk. Use proper risk management.
So speaking of the limitations when it comes to prop firms, so we talked about consistency. They don't want you gambling. They don't want you just put it on 10 contracts and figure it out later on. Let's see what happens. They're not looking for that. So if you think you're going to trick the prop firm in order to get your money, good luck with that. Good luck with that. Go on subreddits, go on Twitter, and find a lot of people who try those sort of things, and it doesn't work. So in addition to that, when you're thinking about your prop firm account, you don't want to be distracted by the the amount of capital that account provides you. So over here on BluSky, you have a premium account that gives you 50K, premium plus 100K, and static growth gives you 200K. What the different account sizes provide you is different profit goals that you have to reach and different drawdown levels that they'll accept. Okay? Your drawdown level, what your drawdown is, that is essentially your account. You have to think of that as your account size, right? The larger account size that they provide you initially is just how many contracts you can put on. So over here for the premium account, allows you to put 10 minis, 100 micros. These are futures accounts. Allows you to put on here 14 and 140 micros. And then for static growth, you can do 20 micros and 2 minis. So it just changes what size of position you can put on. But your drawdowns are the thing that's the most important, because your drawdown, if you reach it, you're done. And here we have there's a difference between trailing drawdown and static drawdowns. So a static drawdown is that you can't go below $2,000 from the opening of your account. So in this account, you have $200,000, but you can only go down $2,000. So that means if your account value drops below 198,000, you're done. All right. But with it being static, let's say you make on the account, let's say your position account value goes up by $10,000. You can still go down to 198,000 because it's static from where you opened the account. Whereas for trailing, if your account value, let's say this $50,000 account can only go down when it opens, it can only go down to 48,000. Anything below 48,000, it gets wiped out. But because it's trailing, let's say you make $1,000 that day. You have a position that's up $1,000. Well, now you can only go down to $49,000. You can go down $2,000 from the highest point in your account. And this can be frustrating for some people because it requires even more discipline. It means that as your position runs up in value, you have to keep in mind that you can't go down as far as you did before. This is another thing that helps you cap this idea of let my winners run. All right. And it lends itself to more scalping. Because if I'm trying to scalp $500 at a time, $200 at a time until I get to where I need to go, it's easier than if I let a position run up $5,000, pull back $2,000, and I'm thinking, oh, that's fine. I was up 5,000. I could give my 5,000. No. That same position that you're in, you haven't even closed it yet. Or rather, you did close it, but the next day you get into that position, you can only come down $2,000 worth. So you actually screwed yourself a little bit by giving yourself too much a runway. It encourages you to close your positions sooner and sooner. Does that make sense, Peter?
It does.
Excellent. So
this is kind of like you do a driving test and you have to parallel park. And if you just look at anything in real life, the parallel parking you did was fine, but because you didn't do it exactly the way you needed to do it for your test, because it was so strict, then you fail your driver's test. You're like, hey, look, I see people parallel parking all the time. They're doing a crappy job, but they're getting it done. But you've got to be perfect. You got to get it first shot, and like that's it. So to me, these prop firms is like forcing you to do things consistently in these narrow limitations. It forces you to be precise with how you're trading, as opposed to you could trade in the wild, and a lot would be acceptable, but you never really know what's going to happen to you.
That's right. All right, a couple of things to keep in mind. So you have your drawdown amount. Now, some prop firm accounts have a daily drawdown limit. Some of them have a weekly drawdown limit. Some of them have both. All right, so you really need to dig down and pay attention to what are the rules you have for the prop firm that you're dealing with to make sure that you're matching those rules, those specific ones. All right. So that's in how much profit you can make and how low you can get. Minimum trading days. So some of these evaluation accounts or sim accounts require you to trade for a certain number of days before you can get paid out. So let's say your evaluation account, you're trying to get to $3,000 and you got to there in $3,000 in 2 days. but you need 4 days of trading. That means you'll have to trade 2 other days, and usually in profit, before you can pass that account or before you can ask for a payout. So there's minimum trading days as well. Most prop firm accounts, well, I shouldn't say that, I don't know. Many prop firm accounts won't allow you to hold a position overnight. This was a big problem for me to begin with because I was a swing trader. I would hold positions for weeks to months. And when you're dealing with prop firms, your position will get closed at when the futures close, or if some of them will close out your position before a major news event. So before the FOMC or before GDP or CPI comes out, because they know there's going to be a lot of volatility, they don't want a bunch of positions being liquidated out just because of one candle. They'll say you can't hold positions over this period of time. And then some prop firm accounts have options to allow you to scale out your plans, to have so you can basically copy trade across multiple different prop firm accounts. This is where we're going to get into TradersPost and how great that can be. So you can imagine you have one prop firm account, but then you can connect it to 5 other prop firm accounts from that same prop firm, and the one trade that you're taking on one goes on all 5. So that can be pretty juicy. That's how you get some of these payouts that people are getting at $100,000 per month, sort of thing. You have payout windows. So some prop firms allow you to get paid out per day, others per week, others per month. BluSky does allow you to get paid per day. And then reset fees. So this is something I had been avoiding. After you blow out an account, sometimes they'll allow you to pay a certain amount in order to revive that account. See it as like a to be continued in the arcade. They're like, look, if you put in $1, I know normally a quarter. If you put in $1 right now, you can start the game from where you are right now on level 17. Okay, great. So you can reset your account, which is for some people totally worthwhile. For if they got to a sim funded account, they're like, okay, instead of passing an Eval account again at $50 and then $99 in order to get back to sim and then build up my position, let me just go ahead and pay the $500 to revive my account right now and continue from where I am. Okay. So when you're dealing with prop firms, here's something you got to keep the math in mind. When you are trading your own capital, you're generally just thinking about the capital you win or lose, and then the fees for either the broker's account and the commissions and the fees for actual trading, right? That's what you're normally thinking about. But when you are dealing with prop firm accounts, you have to keep track of all the money you've spent on evaluation accounts and sim accounts. All that counts to what you are doing. All right. We've had some people pay $50,000 to $100,000 in fees just to get to the point where they're getting to regular payouts. All right. So if you think you're going to sit there and plop down $50, open up a sim account, pass it immediately, plop another $100 down, get a sim account, trade, and get your payout, that may happen. But you may also burn through 10 accounts before you even get close to a payout. And you have to keep the cost for that in mind, keep track of it, so that you're not thinking to yourself, oh, I got a $2,000 payout on my thing, everything is great. I could just go ahead and keep pumping money into this. You have to factor that into the cost of what you're doing. All right. You also have to keep in mind that these accounts, generally speaking, renew automatically. So you might open up an Eval account, fail it in 2 days, open up another one, fail that in 3 days, open up another one again and again and again throughout the month, and then now you pass an Eval account, and then the next month rolls over, and all of a sudden, boom, accounts are automatically renewing. You might have hundreds to thousands of dollars accounts that boom, all of a sudden now show up in your account because you forgot that you agreed to a renewal of these things. So if you don't want your account to renew, make sure that you disable it. And when you're dealing, because of this, because of the drawdown amounts and the cost of the account and that's and so forth, the quality of your strategy has to be more dialed in than when you're trading manually. Like I said, you can't just sit there with a long drawdown. And so depending on your strategy, you might have a lot more losers than you think. And because you can't just let your winners run, you'll have your wins will be a lot more muted. So when you're dealing here with the estimated value, you want to or the expected value of your strategy, you have to count what is your win and loss percentages, and your average amount that you win and your average amount that you lose. And if that amount is not worth it, it does not get past break even and the fees and slippage, then you don't have a viable strategy. You know what I mean? You can have a strategy that wins, but doesn't allow you to win enough, that you're used to winning a lot more than that, and has more losses because of the max drawdown. And you might have a strategy that on paper works great somewhere else, but on a prop firm doesn't. So just because you have a strategy that seems to work in some back tests, you have to back test it with prop firms in mind. All right. So the last thing I want to bring up here before we finish is this idea of where TradersPost comes into play here. Now, the reason why TradersPost is such a great fit for prop firms is that, generally speaking, when you are dealing with a prop firm, you are even if you're going to have multiple accounts for that prop firm, you are generally limited, or you're limited to that prop firm, right? So I might want to have 10 BluSky accounts. Fine, I can buy 10 BluSky accounts and connect them together. But what if I want BluSky, Top Step, Apex Trader? I want to have multiple different prop firm accounts because I want different rules, different sets, different rules, different sets, but the same signal being sent to all of them. Well, there I can connect that into TradersPost. I could go to TradersPost, connect to my my BluSky account, connect to any of the prop firms that exist here. So here I have BluSky. I can connect there, and I could connect 10, 20, 30, 50 other accounts if I want to, just by buying some add-ons for my account. So I can add more prop firm account spaces so that I can have more connections possible. Well, what happens there is that when I trade in one prop firm account, so I send my signal through in one prop firm account, that could be multiplied across 20 different accounts. So what that does psychologically is, if you're thinking to yourself, well, I want to make $5,000 per month. Well, if I only have one prop firm account, then I need to have trades that really win in order for me to get that money, in order to get that payout. But if I could divide that across 10, 15, 20 accounts, then I only need to make a certain amount by the end of a day, week, month, whatever payout I'm looking for, in order to get to that 5,000. You know what I mean? So that means that my trade duration doesn't have to be long. I don't have to risk so much. I don't have to be in the trade so much, because I can just make $200 and multiply that across 15 accounts and then get the money that I need, right? And then I can even do that across multiple different prop firms. So you can imagine there are some people on our platform, I kid you not, who have 70 accounts plus connected together. And maybe they don't want to trade them all in one signal all at once. Maybe they want to go ahead and create a strategy, and one strategy is connected to their 50K accounts. Another strategy is for scalping, and that's connected to another subset accounts from somewhere else. They can have multiple different strategies created, and then send their signals through in order to trade accordingly. More importantly, when I am connected in TradersPost to a particular prop firm account, so I'm subscribing to, let's say, a prop firm, I'm connecting a prop firm to my strategy, I can have different rules for that particular connection. So for example, I might have 3 evaluation accounts with BluSky and 2 funded accounts. And I might say, hey, on my funded accounts, I want to take less risk than on my evaluation accounts. So I might say in my evaluation accounts, let me go ahead and send, I'll send 5 contracts to trade. But on my funded accounts, I only want 1. And I could set these guys up. I could set these subscriptions up per connection to those accounts. So that way, here, let me just clone this one. We can see. And here, I could connect to my my broker. So I could connect to a different broker and then have different rules for this particular one. which is great because when I get back to my subscription, maybe I was trying to pass my eval accounts and those eval accounts succeeded. I passed my eval. I don't need to take another trade in that account. I can go ahead and disable that strategy and still have the other accounts continue on. So you get way more granular control over your accounts when you're using TradersPost than even when you're using copiers from the actual prop firms. All right. If you guys are interested, you guys could go to traderspost.io, use the coupon code PropScaling20, and you'll be able to get 20% off your plan if you're interested. And even if you have a plan already, you get 20% off any add-on accounts if you want to add more prop firms. When it comes down to it, when we're doing the math for how much it actually costs, you know, for an extra $5 per prop firm account, for a prop firm account, you can end up making an extra $50,000 that month. So it's just like such a no-brainer to try. All right, guys. Peter, any other questions you have before we go?
Is there going to be a part 2 to this? Looks like you have more to say.
Only if people are interested. I do want to go through how we actually connect the prop firm accounts and send the signals through and all that. But one, you can see a lot of that on Price Action Live from Tuesdays to Fridays, 9:30 a.m. Eastern Standard Time, when Mike and I are trading literally live prop accounts for your entertainment and edification. So you can see that there. And then there's also our documentation there for that. So if you're interested in more of the nuances of prop firms and what kind of strategies could work and what kind of thinking does work and how to track your successes and all that sort of thing, that's certainly something we would love to help you with. But we need your feedback for that. So anything you're interested in hearing about, please leave it as a comment. We will certainly look at it and take that into serious consideration.
Hey, Jinzo. I see Jinzo in the chat there. He says, we love Traders Posts. A bunch of emojis. Love that. Love to see that. Well, this is fantastic. So if folks want to see more, then they'll let us know. But I guess there'll be more exciting things for Blueprint going forward. But it's prop firm all the time here at Traders Post. You can just watch it 4 times a week. Like and subscribe for that.
Oh, soon we're gonna have other things there as well. So it's not just prop firm all the time. It's prop firm for now because it's fun, it's interesting, but there's all kinds of different ways of making money, all kinds of different trading styles, and all kinds of different assets. And TradersPost is there for you each and every time. All right, Peter, that's it. We'll be back next Thursday with another Blueprint at 3 p.m. Eastern Standard Time. But until then, we wish you, as always, happy trading.